Welcome to the Frank Salman CPA Practice Development Seminar. I'm Frank Salman, and I would like to give you a brief introduction in how I got to be a practice development consultant. I graduated in 1983. I actually graduated as a business major in accounting. From there I went to go work for a small local CPA firm, and I was there for about 1 year and 3 months before they decided to let me go. When they let me go, I was a little bit distraught, did not know what I would do. I went out to try to find a job, couldn't find one. I thought to myself, well, why not go out and start my own accounting practice? I could think of a lot of reasons why I couldn't do it. One, I was not a CPA as of yet, and number two, I didn't have the necessary resources or the capital. Really just had a last paycheck and a credit card, but I went out and started the practice anyways. And having started the practice and operated for about 1 year and 3 months, the State Board of Accountancy in the state of California informed me I would never become a CPA without going out and getting experience again, because in the state of California, you cannot use self-employment to fulfill the 2-year experience requirement. So anyways, I sold that practice. I sold it for $20,000 cash. Now at that time, I was 24 years old, and for me, I thought I hit the lottery at a very young age. The previous year, I had worked for a whole year, making $19,000 a year, not really being able to save much, and all of a sudden now somebody hands me $20,000 cash. Again, I thought I'd hit the lottery at a very young age. It was a very lucrative experience to have at a young age and taught me many things that I would employ in my future. But from there I went to go work for a local CPA firm again to fulfill the experience requirement. I was short about 8 months, and after being employed by that CPA firm, I went out and applied for my certificate, which it was granted. From there I started my second practice. It was in the city of Rancho Cucamonga in California. Back in the 1980s, if you did enough things over enough period of time, eventually you'd end up with a very good practice, and that's what happened. It was through tenacity and the school of hard knocks that I ended up developing a very successful practice for myself. Now, some of the things that I did back then were complete economic disasters, but other things had some success, and it was really that tenacity that paid off, which allowed me to have that practice. Well, we decided at that time to relocate, and having sold my previous practice the way I did, it seemed good to sell this practice, relocate, which is exactly what we did. Now, when I was starting my third practice, which was in January of 1992, I went out, leased my empty office space, and I did the things that had worked for me in the past, but unfortunately they weren't working very well at all. And I became very frustrated, and the more frustrated I became, the harder I tried, and the harder I tried, it seemed like the least successful I became. So here I am, starting my third practice. I have my office, nothing was working, and I was driving home one day, and I was thinking to myself, look at all the businesses around here. And I could look out the window and I could see many businesses around me. And I kept telling myself, I know there's businesses out here that want to change. How are they going to find out about me? What am I doing wrong that would cause me to have such lack of success? And I knew from experience that once somebody was referred to me, generally they really liked me. So how can I find those businesses that want to change and get them to become interested in me? And it was at that time I completely rethought practice development. It came to me that if I was sick at home and a doctor called me up and said, Frank, can I be your doctor? I'd say no. Well, why do I say no? I say no because I don't know who that doctor is. But yet if the same doctor were referred to me, would I not sit down and in their reception room and wait an hour and a half to see the same doctor? And see, it's the same doctor. Well, what's the problem? The problem is that if a doctor calls me up and asks me, can I be your doctor? I don't know who the doctor is. And what I'm really looking for is a doctor that I can trust that can make me better. And yet if someone refers me to that doctor, then I say to myself, well, you know what? That's a doctor I think I can trust. So I go to that doctor. And I thought the accounting profession is much the same way. Quality clients use CPAs because they trust and believe in that CPA. Trust has to be established. It can't be sold. So again, I rethought the way I did practice development and took a completely different approach. Turned out to be the most successful thing I could have done. Ended up with a tremendously successful practice. Having achieved the success that I did, I decided to myself, well, you know, I sold my other 2 practices for cash. Why can't I sell this one for cash? And I did that. From the time I placed the ad for that practice, from the time I sold it for cash, was a duration of about 1 week. Having found the key that unlocked the door for me in successful practice development, I went on to build 3 practices 3 years in a row doing the exact same thing. When I sold my last practice, which was in Victorville, California, everyone who came to look at the practice kept asking me, Frank, how on earth did you do this? It really wasn't the quantity of clients, it was the quality of clients. Yes, in terms of annual billings, we had developed about $150,000 a year practice in 11 months. But again, it was the nature of the accounts. I had John Wayne's pilot, who was a client of mine. I had 7 franchise pizza stores. I had physicians. And everyone who came to look at it would say, Frank, you just started this practice in January of this year. How did you do this? And what they said is, Frank, I really don't want to buy a practice. What I really want to do is to have my own practice or to increase the amount of clients that I have. But everything that I have done hasn't worked. And they said, Frank, if you could just show me how you did this, then I wouldn't have to go out and buy a practice. And that really hit home with me because I had struggled so hard for 8 years making many economic mistakes. And I thought to myself, why could I not take somebody who wants to have their own practice and show them exactly what to do, how to do it, give them all the help and support that they need so they don't have to make the mistakes that I made and they can be just as successful right in a nice, neat, straight line. And I thought to myself, that sounds good on paper, but does that really have practical application? So what I did is I placed an ad in the Los Angeles Times looking to conduct an experiment. And what I was doing was looking for CPAs looking to start their own practice. I had 5 CPAs respond. I did exactly what I just described. And as it turns out, they were tremendously successful. In fact, one of the CPAs who had lost his job and only had 6 months of severance to regain his salary told me, Frank, that in 11 months he had achieved $100,000 in gross billings just by taking the same marketing principles and employing them in their practice. What that did is that gave me confidence that in fact I could help CPAs develop their own practices. Now, having been a practice development consultant for 17 years, I never dreamed of the success that would have achieved in helping CPAs. Over 2,000 CPAs I've been hired to individually assist them and have developed their practices or participated or employed these marketing principles to develop their practices. Been interviewed by the Wall Street Journal, Journal of Accountancy, and have helped some prominent CPAs without naming them in our profession. But over the course of the 17 years, and having talked to literally might be tens of thousands of CPAs, I feel like many CPAs are going astray. And many marketing companies to CPAs are not teaching those things which are correct, which is what prompted this seminar to be recorded. It is a seminar that's going to help you target market correctly, employ correct practice development techniques, how to stay focused on managing a quality practice that works for you, and also teach you those things that you need to look out and avoid in terms of marketing to avoid the financial disasters that others have been partakers of. And so it is. That's how I got to be here today. That's how this seminar came into existence. Now, with that said, we're going to start this morning, and we're going to start about marketing for business clients. The first thing that you have to do in any type of marketing is you have to develop what we call a target market. For individual clients, it's very difficult to do because they're so scattered. But fortunately, we in the accounting profession are extremely fortunate that we can define a target market. So the first thing you're going to do is you will contact a major list compiling company. There are two major list compilers in the United States today that I know of. Every other company that you see in the phone book is either a list broker or a deficient company. A list broker is one who buys from a compiling company at wholesale, then turns around and sells that list to you at resale. It makes a whole lot of good sense to just buy directly from a compiling company. Now, we originally started using American Business Information that changed their name to Info USA. I had a lot of complaints concerning the deficiency of their list, which prompted me for about 10 years to switch to Dun & Bradstreet. But with the economy going into what really is a recession, unfortunately, Dun & Bradstreet did not do a sufficient job in verifying the accuracy of the data they were selling, which prompted us to switch back to Info USA, which does a much better job and has a substantially better quality of lists today than Dun & Bradstreet. The compilation companies, the way they extract this data is they go to phone records and county records and they get business license and new phone listings, and then they are to call and verify that information before they turn around and sell it to you. Dun & Bradstreet, with the downturn of the economy, there was many defunct businesses which had gone out of business, and some people had reported to me as much as high as 40% deficiency rates. So again, we switched to Info USA, which is the company that I recommend currently that you procure your list from. It would be good for you to call me perhaps before you purchase a list, and I'll be more than happy to give you current data in terms of which list we are using, because they do sometimes, like I said, we started out with Info USA, had to switch to Dun & Bradstreet, now we're back with Info USA. So in a few years from now, we could very well switch back to Dun & Bradstreet depending upon the accuracy of the list. But either way, you're going to contact a major list compiling company. And what you're going to need to do is come up with parameters to define what is a good quality or a good quality client for you. Now, there's many different parameters, but we're going to start with the most common, and that would be employee size. So what you're going to do is you're going to contact Dun & Bradstreet or InfoUSA, and you're going to give them the employee size of companies that you think would be good clients for you. Now, generally what I did is I started out with 0 employees and went up to 30 employees depending upon the demographics or the geographics I was marketing. You might ask me, well, Frank, do I really want a company with 0 employees? The answer to that is yes, because I have found 0 to be a default number, which basically means if that information is not made available, the computer will automatically default to 0. Many times 0 will include license transfers. So when one particular business is sold to another business and they have to transfer the license, many times that shows as a 0, and that also becomes sometimes your best chance for developing a new client. Many times when a business is sold to a new investor, sometimes they want to come back and say, listen, we do not want to use the accountant they were using. They want to find a new CPA that will work for them. So license transfers, generally speaking, are great opportunities for you, and I don't want you to exclude a great opportunity. Therefore, I recommend you start with 0 employees. Now, why do I stop at 30 employees depending upon my geographics or my demographics? I find the higher the number of employees becomes, the higher probability they're going to ask me to perform in a testing function. And generally, I try to avoid attesting functions, that is, the audits and reviews. Well, why did I avoid them? Well, for one thing, they generally had a lot of risk associated with it in terms of liability. And number 2, it required additional peer review requirements in many states, along with additional CPE requirements. Also can upgrade the premiums of any liability insurance you might have. But even more than that, having sold 5 practices, I do know the first thing someone's going to ask you is when you sell your clients or your practices for sale, the first thing they're going to ask you is what is your average fees? If I could tell someone my average individual tax return is $500 or $600, or my average monthly write-up is $300 or $400 a month, they're going to really like that answer because they're looking for a high quality practice. That will lead them to question 2. Question 2 is what is the balance, the composition of your clients? In Victorville, which was my 5th practice, I answered that by saying we have $80,700 in write-up business and we have $70,000 in tax work. That was what compromised the $150,000 a year practice. Well, they liked that because it was well balanced between write-up and tax, and it was a high quality practice. And because of that, I could sell my practices extremely quickly and generally for all cash. My 4th practice, from the time I placed the ad to having cashier's check physically in my hand, was 3 days. Why? Because it was a well-balanced write-up and tax practice with good, high-quality clients. So with that said, that's why I started from 0 and went up to 30 employees, because of what I was looking was to develop a well-balanced write-up and tax practice exclusive of the attesting functions. Now, with that said, we're all looking at developing something different. And I have worked with many, many large accounting firms, including national firms. And some of those want nothing to do with smaller clients. I worked with a very large firm in the Encino area of California, and generally in a few months of marketing, they generated 6 clients worth between $100,000 to $150,000 in fees. But obviously they were searching for large clients. So with that said, they upped the minimum of employees to a much higher number. I have actually been engaged with companies that set a parameter of no less than 250 employees, or you were not to be included on the list and not a possibility of becoming a client. And again, the reason I'm sharing that is because we're all looking at developing something different. The next thing that I had on that list was sales volume. Sales volume, you can add or not add, it's up to you. Generally, I started with 0 in sales, went to 1, 2, 3, 4, 5 million, whatever it might be, in terms of looking at or developing the type of client that you want to develop. The reason I say that if you want to exclude sales volume as a parameter, because generally you can use the focus of employee size in and of itself, exclusive of sales volume, to define the type of size of client you're actually looking for. So if there's an extra charge to stratify by sales volume, you really don't need it. The next parameter that we use is credit information. Now, credit information is something that is available to you. It's something that is going to warrant a premium from price in terms of what you pay the list company. Is it necessary? I don't know. I don't think so. This information is employed by the list compiling companies, mostly for use for credit card companies. One time when I employed or procured a new business license, I think it was the 4th CPA firm that I had started. Having extracted a new business license, I got a call from one of these compiling companies. They verified the information, my name, address, phone number, etc. And just a few months later, I ended up getting a pre-approved credit card in that business name, which I'm sure was extracted from that data that was verified by the compiling company. So, credit information. Option you have to pay for separately. They charge a premium for it. Is it necessary? I don't think so. I would not recommend it. I mention it in this seminar only for the purpose of letting you know that it is something that is available to you. So currently we have employee size, we have sales volume, we have credit information if we so desire. We have the business name, we have the address, we have the phone number. You also need to make sure you request the contact names. Again, that's something they may ask you exclusively as being an added cost, but it's certainly something that you need to have. Make sure you ask for contact names. Having had those things, the next thing you're going to go by is industries. And what I'm going to have you do is I'm going to have you exclude those industries that you absolutely do not want on your list. And the first industry that I always excluded was easy, other CPAs. Certainly we don't want to pay for a database of other CPA firms. I also excluded income tax practitioners, which some compiling companies separate from some CPAs. Others conglomerate them into one. But I make sure to point out to the compilation company, I want income tax practitioners excluded as well. From there, I screened out the municipalities, financial institutions, and also educational institutions. That is the cities, banks, and schools. Why did I exclude those industries? Because all of those industries require audits. And I was trying to exclude audit services from being performed by my firm. So I did not want to pay for a database that included clients I was not interested in having on board with me. So I excluded them. The next thing that I excluded in my fourth practice and my fifth practice, but not in the third, was non-for-profits. Now, in the third practice that I started using these marketing techniques, I included non-for-profits as part of that database. But what I found was that non-for-profits was actually the easiest industry to develop. It was so easy that I found myself in the position of having to say no to businesses that were interested in having my firm become their accountant. Now, why did I not to want to perform services for non-for-profits? I have found in my experience that non-for-profits have a tendency to shop CPAs. That is, there's a third party requiring the audit be performed. That is, according to some compliance measure, according to a charter, according to some governing body, according to a lending institution, you must have this audit every year. And the mentality becomes, well, man, what's the least amount of money I can spend and get this requirement fulfilled? And because of that, they have a tendency to shop CPAs. And I wasn't interested in a client coming to me because I was less expensive than their previous CPA. What I'm interested in is a client coming to me because they see the value and want me to be their accountant. So from that standpoint, I excluded non-for-profits. Now also, I'm not a 990 person. Non-for-profits is an area I have never gained expertise. I've prepared a few 990s in my lifetime, did not enjoy preparing them, and it is not something I desire to do in my future. However, you may enjoy non-for-profits. You may like preparing 990s. It may be your level of expertise. It may be the industry you have been brought up in. If that is true, I would encourage you as much as I can to go after nonprofits as clients. I personally believe through my experience that they are the easiest industry to actually develop. There was a CPA who contacted me, and he wanted to engage me to assist him in developing his practice. I believe he was starting with virtually no clients. We implemented my marketing techniques via a direct mail campaign. He actually only mailed 100 letters to non-for-profits. He was targeting non-for-profits. We composed the letters for him, and having mailed 100 letters out, he ended up with 2 clients that each paid him $5,000 in fees. So off a $100 investment, he ended up grossing over $10,000 from the direct mailing campaign, and that was only his initial start. Again, sharing it only because non-for-profits, I feel, is the easiest industry to develop. Now, with that said, we've screened out the CPAs, tax preparers, the educational institutions, financial institutions, municipalities, and whether you so choose, non-for-profits, it comes to a point where many CPAs will come up to me and say, Frank, there's some industries I don't like. I don't like gas stations. Don't ask me why. I just don't like them. I also, Frank, don't like restaurants. I don't want any restaurants as clients. Can I just eliminate all gas stations and all restaurants? The answer is no. You can't. Well, why? I don't like gas stations. I don't like restaurants. Well, generally, just because a client is in an industry you don't like doesn't mean you don't like that particular client. And I will agree that gas stations are an industry which is, at least in my opinion, desirable. I had a gas station in Victorville, and in each quarter we had to file a 941 with the federal government, a DE3 for the state of California, that's a state withholding. We had also the State Board of Equalization sales tax return. We had an underground bulk storage fee tax return. We had the lottery to contend with. And generally speaking, gas stations have a lot of cash that comes in that somehow never equals the cash that goes out. And reconciling them can be extremely difficult. But when I was in Victorville, I had a gas station as a client that paid me $450 every month that perhaps took 2 or 3 hours to perform the service. And you see, if I would have excluded gas stations, I would have never given myself that opportunity to develop that as a client. Also in Victorville was marketing. Found a well-established, famous restaurant who liked the way that we approached him, was looking for a new CPA, and I met with the owner. Thought I had done a great job in presentation. He asked me, how much do you charge? I told him what I charge. He came back to me and said, Frank, well, I want everything done for $175 per month. I said, no way. No, thank you. $175 a month for a restaurant with allocated tips and everything else? I don't need that. And I just politely said, no, thank you. And you can always say no. I just don't want you to exclude the opportunities to say yes. Also in Victorville, I had 7 franchise pizza stores, estimated $35,000 a year in revenue. And if you exclude an industry, you exclude opportunity. So just because an industry is not desirable doesn't mean exclude it. Now, I have worked with many CPAs who have focused only in one industry. I have worked with firms that just have dentists as clients, just have physicians as clients, just have automobile dealerships, just have construction companies. And I've really worked with some CPAs who have some very unusual niches, such as selling and installing oil and gas softwares to oil and gas companies. These were $30,000 to $40,000 packages. Worked with a CPA that did compliance audits on attorneys' trust accounts. Worked with CPAs who are interested in part-time controllerships, part-time CFOs, from a CPA auditing utility companies for mobile home parks to find deviations from residentials to commercial rates. All kinds of different practices have I helped CPAs develop. What I'm going to tell you to do is, if you have an industry that you focus in, just procure a list for that industry, especially if it's an industry that is needs sensitive. For example, physicians always want a CPA who does a lot of physicians. Automobile dealerships are that way as well. And if you have a niche in an industry like that, you can focus in your marketing to demonstrate your expertise in that industry, and that'll help you tremendously in the results of your marketing. Case in point, when I had my 5th practice, which was again in Victorville, California, you hear me refer to it as Victorville, my 5th practice, you refer to it as both ways. I was marketing and I found a pet store that was looking to change accountants. And ironically, they had a meeting scheduled that Monday with a new CPA that they were going to conduct an interview with. They liked the way that we approached them through the telephone, expressed the need of desiring a new CPA, and I got on the phone. And what the business owner said to me was this. He said, "Frank, what we really need is a CPA who knows our industry. Our industry is different than any other industries." And at that moment, I said to him, "Well, you know what? You've got the right CPA. I am familiar with the pet industry. I also have horses. I'm familiar with the feed industry. And your inventory, your business is different than other businesses, mostly because of your inventory. Your inventory has a holding cost. The holding cost of feeding, watering, taken care of, and you have to figure the optimal inventory to reduce your costs but still have products that are available for sale." His response to me was, "Frank, you're the guy I need to speak with." Well, what did I do? I demonstrated the expertise. He liked that, and immediately I had a meeting with him. And I want to tell you, the prior accountant was charging only $20 a month to do the payroll. $20 a month to do the payroll. Our quote was $200 a month, 10 times as much as the prior accountant, and I don't know how they were doing it for $20 a month, but still he was willing to switch just from the demonstration of the knowledge of the industry, because the value was using me and not just the cost of the services. So enough said with industries, and I think we covered that well. The next thing we're going to do is go by locations. And what I'm going to have you to do is I'm going to have you give the compiling company the parameters that you came up with to define what's a good client for your firm, along with the zip code of where your office is located. Now, the reason I'm going to have you start where your zip code is located is it's easier to market in close proximity to your office or your home. The reason for that is there's a lot of variables of resistance for businesses to change. And one of the variables that works in a real positive way for you is in close proximity. So one of the questions they might ask is, where are you located? And if I'm located a mile down the street, I got a great big plus in the plus column. And what I'm trying to do in presentation and marketing is get as many pluses as I can in the plus column and stay away the negatives. So what you're going to do is give your compiling company the zip code of where your home or office is located. They're going to come back to you and they're going to tell you how many businesses are in that zip code with that parameter. Then what I want you to do is add another another zip code, and another zip code, and another zip code until you get to 5,000 names. And when you get to 5,000 names, I'm going to have you stop. Now, I get a lot of questions here. First question is, Frank, why 5,000 names? 5,000 sometimes will give you a price break, so it seems good to take advantage of the price break. 5,000 will keep you more than busy. Generally, most CPAs don't get through all of the 5,000 before they inundate themselves in a position where they need to catch up on work. So 5,000 is a good number. Now you might come back to me and say, well, Frank, I'm in a small town and I don't know if I can get 5,000 names of businesses in this small town. What shall I do? And I'm going to tell you, don't worry about it. In Victorville, I had to go 24 miles in 2 different directions to get 3,305 names on my list. That's all I could get, and still developed a $150,000 a year practice in annual billings in 11 months. I have worked with some people in some very small towns. The smallest town I believe a CPA was in that I've ever worked with is in Twisp, Washington. If you get a map, look where Twisp, Washington is. You'll see it in the eastern part of the state, in the middle of what some might call nowhere. Twisp has a population of 800 people. I believe he had to go 64 miles out to get 4,000 in just physical population. This particular person hired me to help him develop this practice. He did extremely well. In a couple years, he had discontinued his marketing efforts. He had developed a practice of which he dreamed to have. And a few years later, he actually decided to sell the practice and retire to what he informed me were his apple orchards. So, again, if you're in a small town, can't get 5,000, don't worry about it. Now, you may come back to me and say, well, Frank, our area is different. Now, this is what I always hear from CPAs for years. Our area is different, Frank. You don't understand what this area is like. Every other person here is a CPA. I'm going to tell you, I have been told the state of New Jersey is the most densely concentrated state of CPAs in any state in the United States. How dense is it? I've been told it is so dense that the next nearest state to the state of New Jersey is not even half as dense as the state of New Jersey. Are you saying the state of New Jersey is twice as dense, concentrated of CPAs than any other state? That's exactly what I'm saying. If you took a geographic municipality, the most concentrated region or municipality or area that I believe is located anywhere in the United States is the San Fernando Valley of California. Interestingly enough, the San Fernando Valley of California and the state of New Jersey have been 2 areas where we have been most successful in helping CPAs develop practices. Not just CPA firms, but in the state of New Jersey, also helped a CPA develop a payroll practice as well. Well, you might come back to me and say, Frank, well, my problem is not that there's too many CPAs. My problem is this is a poor area. We can't charge the fees that you charge in California. This area demographically is poor, and we can't get decent fees in this geographical location. I would fully challenge you against that statement. When I started my practice in Victorville, California, I'll go toe-to-toe with anybody in terms of demographics. We have no industry in Victorville at that time. It was quoted that 70,000 people traveled 40 miles or greater just for a job in terms of going down the hill for employment a week. Tremendous. In Victorville, when I started this practice, we had close to 30% unemployment in some of the cities. Not unemployment, but welfare. We had 30% of the population on welfare when I started this practice. Geographically and demographically, Victorville is one of the least demographic areas in the state of California you could start a practice. But when I started the practice in Victorville, not only did we develop a $150,000 practice in 11 months, but also became not if, but possibly the most expensive practice in this area. Why? Because we didn't market based upon cost, we marketed based upon value. So don't be concerned that your area is different. I get asked here all the time about mom and pops. Frank, what do you think about small businesses, mom and pops? I like mom and pops provided they adequately compensate you. The key that I'm looking for is not necessarily size of the client, it's quality. And my firm had a minimum. We didn't touch anything for less than $100 a month. That's all that there was. And I had a couple clients that fulfilled that requirement. One of them was just a company that we received one check and recorded it as a deposit, and we recorded one check, which was ours, for $100. That's all we did for $100 a month. I'm okay with that. Mom and pops are fine as long as they adequately compensate you. I had an attorney, had no employees. I think he did somewhere between $100,000 to $200,000 in sales by himself. We charged him $300 a month. I'm okay with the mom and pops provided they adequately compensate you. The thing that concerns me the most is the CPA firm that has one major client. All their eggs are in that one basket. And because they are in that one basket, every time that client calls, they hop, and their focus of attention is on that major client. It's their bread and butter, and they have a tendency to neglect the other sides of their practice. And it's great as long as that one major client is there. But I can't tell you how many times I get calls from CPAs who are financially devastated because the one client that they never thought would ever leave all of a sudden left, and they left them financially broke. If you have a major client that is paying you revenue, I promise you a day's going to come where they will leave you. And as every year goes by, you've got 1 year closer to whatever event's going to cause that major client to leave you. And I highly recommend, as much as I can, that you sever your dependence from that one client so you are not financially needs dependent upon them to meet your revenue, but start marketing and diversify your practice with other clients. Enjoy the major clients, but market for other clients. Delegate and process efficiently with those other clients. That doesn't involve your time. You generate revenue from those minor clients, and indeed, now you've got a great practice which is not dependent upon one major client. The other question I get asked here all the time is, can you start a practice out of your home? As technology has developed and the business world has changed, many businesses are very conducive to you starting out of your home. And if you are starting a practice, I'm going to encourage you to start out of your home. Now, so often accountants will talk to other accountants that I've worked with, and they'll come in and say, listen, don't start out of your home. just go out and get an office and you'll be very successful, and you don't necessarily have to start out of your home, go get the office. But I'm going to tell you not to do that. I don't want you to put any unnecessary obstacle in front of you that's going to impede the success or the opportunity for success of developing your practice. So ideally what we want to do is eliminate as many costs as we can that are unnecessary and give yourself ample opportunity to generate cash flow, which will finance the development of your practice and avoid you going into debt. I am not a fan of being in debt. I've been debt free, and I encourage accountants to be in that position. Once you develop your practice out of your home, you have developed cash flow, but you've also developed confidence. And I think the confidence is even more than the cash flow, that if you so choose and you want to go get an office, you can do that with confidence and cash flow. A point that is probably to bring out here is I think it's extremely important you develop the type of practice or identify the type of practice you want to develop. I work with CPAs who start out of their home and want no employees. And they can typically, on average, develop at least $100,000 in billings out of their home and take home $90,000 of it. That's generally a good all-around average. I've had CPAs go as high as $200,000 out of the year, $200,000 practice out of their home every year with no employees, but that's not the average. And some people, I've worked with some mothers who have given a new birth who want some time with their children and maybe just do $40,000 or $50,000 out of their home. But that's the kind of practice they want. And if that's what you want to develop, I encourage you to develop. Other CPAs that I've worked with have gone on to build $800,000 or even $1 million practices, and that's what they want to do. So the thing that you need, I'm telling you, is define what you want to develop. And if you're content working out of your home and having flexible time and finances, I encourage that. I think the quality of your life is the single most attribute that you're looking to develop. Now, what do we got? Well, we've got 5,000 businesses we know an awful lot of information about, right? We know the name of the owners, the contact name. We know the name of the business. We know their address. We know the phone number. We know employee size. We know the sales volume. We know credit information. We know what industries they're in. We know locations. We know a lot of information about these businesses. And based upon everything that we know, we can physically look at these businesses on this list and say to ourselves, these are all good businesses for us. Based upon all the attributes we can physically see, we can say to ourselves, they would all be good businesses for us. Now, one of the things that you're going to have to understand is that if a business likes their CPA, they like them. I am not interested in you trying to sell them away from a CPA. I don't think it'll be done. I think it'll backfire on you, and I think it will give a negative impression upon you on their firm. You are not after trying to sell your services to them. What you're after is a business on that list that has decided they need or want to change accountants. They are in the position of actively searching for a new CPA, asking themselves, how can I find a good CPA? Now, that's difficult. You might be very frustrated trying to develop clients, but how much more frustrated are those who are trying to find a good CPA? Because what they're trying to do is find a good CPA, and how do they know if they're good unless they used them? They don't. That's the problem. It's almost like if you've been hit by a car and you need an attorney, you need a good personal injury attorney. How do you find one? I mean, there's so many on TV, and you think, well, man, do I really want to use those, you see? But if someone refers one to you and said, I've had an experience with this attorney, and based upon my experience, they were very good, now suddenly I say to myself, they're very good, and now suddenly I want to use them. Why? Because I've defined or fulfilled the need in me to determine that they were good. So, your target market is the 5,000, but a more narrower scope of that target market is those businesses on that list that in fact need or want to change accountants. Now, some practice development companies I have heard have said 20% of all businesses are looking to change accountants. That is not true. 20% of all businesses are not looking to change accountants. It's nationally publicized that 5% of all businesses are looking to change or need a CPA. I like to say that at least 200 businesses out of 5,000 businesses are in active search for a new CPA. We may say it's optimistically 300, 5% is 250, so statistically we're accurate if we say between 200 to 300 of those businesses are in need of a good CPA. How do they find you? How are they going to know that you exist? You're in your office, you're in this city, they don't know who you are. But here's the thing. You know who they are. Why? Because they're on your list. They're on your list. You can see them. That means the ball is in your court. I knew when I was 24 years old, I could not actively wait for a business to seek me. I had to go out there and reach them. I had to get them a vehicle to get to me. Now, with that said, and because we've got a defined target market, there are only two vehicles I recommend you employ to communicate to that target market. That's going to be either the use of the telephone or use of direct mail. Avoid email solicitations as spams. Regardless of what anybody tells you, spam marketing email does not work. I've talked to CPAs that send tens of thousands of emails at $50 for $10,000 at a crack zero. With spam filters and the abuse of internet marketing through spam email, it's a worthless proposition if somebody is trying to solicit you to spend your dollars conveying or using that vehicle. You are going to use telephone or you're going to use direct mail. Why those two? As far as business marketing is concerned, any other choice of vehicle is going to require you to spend dollars communicating outside of your target market. Why would I want to spend money communicating to some business or individual that's not on my list? That doesn't make sense. So what we're going to do, or what you will do, is use telephone or direct mail. Now, this is the point that you have to understand, and I try to convey it in the greatest clarity that I can. But unfortunately, every time I explain it, there are some people that just don't get it. So here I go. I'm going to try to explain it as clearly as I possibly can. The vehicle that you choose to communicate your marketing has nothing to do with the success of that marketing. It is the approach that makes what you are doing successful, not the vehicle. The vehicle is responsible for conveying that approach to the targeted user. That's all. The vehicle's a transfer. It gets the approach from you to that target market. Its job is complete. But so often it gets blamed for the lack of success. I can't tell you how many CPAs that I've spoke to who've come up to me and said, well, Frank, I did direct mail. Direct mail doesn't work. I talked to a CPA in Texas who came back to me and said, well, Frank, I mailed out 5,000 direct mail pieces. And do you know I got 0 clients? 2 responses, he said, 0 clients. Direct mail does not work. Do you know what I said to him? Did not the U.S. Postal Service do their job? Did not the 5,000 businesses receive what you actually sent? Listen to this. Did not the 200 or 300 businesses that actually were in need, looking for a CPA, receive what you sent? Yes, they did. But what happened to whatever you sent? It went into the trash can. Well, why did it go into the trash can? Because the approach that you used on your mailing piece was deficient and did not work. If you mail 20,000 sheets of blank paper, it's going to cost the same as if you mail out 20,000 sheets of paper with meaningful information. That is why it is so expensive to try what I label false direct mail marketing campaigns. The value is in the substance of the letter and how it is packaged to the potential user. I can't tell you how many people that I've talked to have said telephone doesn't work. I've done telephone. Telephone doesn't work. No, the call got there, didn't it? It was your approach is what did not work. It is that approach that finds a business that wants to change and gets them interested in you so you can convey your presentation. Now, presentation is the foundation for your pricing. Inasmuch as you cannot build a house and lay it without a foundation, for surely it will collapse. You cannot try to build a pricing structure without a foundation laid in presentation, which unfortunately is what most CPAs do. And then they find that they cannot get the fees from their clients because they never laid the foundation for those fees. The best way to illustrate this as we talk about presentation is when I had my practice in Victorville, there was another CPA about a quarter mile down the street. And ever since the first day I opened my practice, he always came in my front door wanting to know what I was doing. Well, he had, over a series of years, maybe $125,000 a year practice, estimating, guessing. But he wanted to know how it is that I was marketing. Well, I, of course, never conveyed to him any information, and he always kept calling and walking my office. But 11 months later, when I sold the practice and he saw my ad for sale, he knew who it was who was selling the practice. He came in my front door and said, "Frank, are you selling your practice?" And I said, "Yes." He said, "Well, I want to buy it." I said, "I don't believe you." He said, "Oh, I do. I really want to buy your practice." I said, "Well, if you want to buy my practice, you can pay me the non-refundable deposit and sign the agreement." And do you know what? He actually signed the agreement and handed me a check. And I said, you know, if he's going to go this far with it, I will too. I mean, I can use his deposit. I couldn't believe he proceeded. So we meet on another appointed day, and we're sitting down and we're going through the files. We're going through the files, and he goes through everything, and he gets all done, and he says, "Frank, there's nothing in here concerning marketing." I said, you know, did you really think I was going to put something in there regarding marketing? And then he looked me in the eye and said, "Frank, I don't want to buy your practice." And I said, you know, I know that. I knew that from the beginning. He said, "Okay, all right. He said, "I got to be honest with you. I don't get it." He said, "Frank, I just don't get it." He said, "What I don't understand here is I've gone through your clients. I know who your clients are, and I know what you're charging. But what you don't know, but I do know, is that I was the CPA bidding against you on many of these clients." And listen to this. He told me 100% of the time I bid more than he did, and I still got the client. He said, "Frank, one of your clients you bid twice as much as I did, and you still got the client. How's that possible? I don't understand." Do you know what Paul didn't understand? The foundation for presentation is what you lay your pricing structure upon. Now, this is the thing that I really want you to get out of this seminar, is how to develop quality clients and how to understand a client's needs so you can build your own foundation and have a high quality practice with high quality fees.